experiencing high volatility, some investors may become concerned about the potential for further losses and decide to sell their stocks. On the other hand, if the market is performing well and investor sentiment is positive, investors may be more inclined to hold onto their stocks in hopes of further gains. It's important to note that market conditions can be unpredictable and subject to change rapidly, so it's important to consider your personal financial goals and risk tolerance when making investment decisions. It's also a good idea to consult with a financial advisor or do your own research to stay informed about market conditions and potential risks or opportunities. Personal financial needs. If an investor needs money for a major expense, such as a down payment on a house or paying off debt, they may sell their stocks to access cash. Personal financial needs refer to an individual's financial obligations or goals that require access to cash. If an investor has a significant expense that they need to cover, such as a down payment on a house, medical bills, or other unexpected expenses, they may decide to sell some of their stocks to access cash. In some cases, investors may also need to sell stocks to pay off debt or cover day-to-day expenses. It's important to carefully consider the potential tax implications and transaction costs associated with selling stocks before making any decision. It's also important to consider the impact of selling stocks on your overall investment strategy and long-term financial goals. If you need to sell stocks to access cash, it may be a good idea to re-evaluate your financial plan and make adjustments to ensure that you are on track to meet your goals. Changes in the company's performance. If a company's financial performance or outlook changes significantly, investors may sell their stocks to avoid further losses or take advantage of gains. Changes in a company's financial performance or outlook can also influence an investor's decision to sell stocks. If a company's financial performance deteriorates, or if there are concerns about the company's future prospects, investors may sell their stocks to avoid further losses or to free up capital to invest in other opportunities. For example, if a company reports disappointing earnings or revenue growth, its stock price may drop as investors adjust their expectations for the company's future performance. Similarly, if there are concerns about the company's ability to compete in its industry, or if there are management changes or other significant developments that could impact the company's future prospects, investors may sell their stocks to minimize their exposure to risk. It's important for investors to carefully monitor the performance of the companies in which they have invested and to stay informed about any significant developments or changes in the industry or market that could impact the company's performance. If you are considering selling stocks due to changes in a company's performance, it's important to consult with a financial advisor or do your own research to fully understand the potential risks and benefits of the decision. Changes in personal circumstances. If an investor's personal circumstances change, such as a job loss or major life event, they may sell their stocks to cover expenses or reduce financial stress. Changes in personal circumstances can also influence an investor's decision to sell stocks. For example, if an investor experiences a job loss or other significant financial setback, they may need to sell stocks to cover their expenses or to free up capital to invest in more stable or conservative assets. Similarly, if an investor experiences a significant life event such as a marriage, divorce, or the birth of a child, they may need to adjust their investment strategy to reflect their changing financial goals or priorities. It's important to carefully consider the potential tax implications and transaction costs associated with selling stocks before making any decisions. It's also a good idea to consult with a financial advisor to help you evaluate your options and make informed decisions about your investments based on your personal circumstances and financial goals. Here are some general reasons why investors might consider selling stocks. Profit taking. If you have made a significant profit on your investment, you may consider selling your stocks to lock in your gains. Profit taking is a common reason for selling stocks. When an investor sells a stock that has appreciated in value, they can lock in their gains and turn the paper profits into realized profits. This can be a way to take advantage of a stock's upward movement while reducing the risk of potential losses if the stock were to decline in value. Investors who practice profit taking often have a specific price target in mind or use technical analysis to identify when to sell their stocks. They may also use stop-loss orders to automatically sell a stock if it falls below a certain price. However, it's important to note that profit taking can have tax implications. If the stock has been held for less than a year, the profits will be subject to short-term capital gains tax, which is typically higher than long-term capital gains tax. Investors should consult with a tax professional to understand the tax implications of selling their stocks before making any decisions. Changes in market conditions. If you believe that the market is headed for a downturn, you may consider selling your stocks to avoid potential losses. Changes in market conditions are another reason why investors might consider selling stocks. If an investor believes that the stock market is headed for a downturn, they may decide to sell some or all of their stocks to avoid potential losses. It's important to note, however, that trying to time the market can be challenging and risky. Even professional investors and market analysts struggle to predict market movements accurately. Selling stocks in anticipation of a market downturn can result in missed opportunities if the market continues to rise, and it can be difficult to know when to re-enter the market after selling. Investors who are concerned about market conditions may consider diversifying their portfolios by adding bonds or other less risky assets. This can help reduce the overall risk of their portfolio and provide some protection against market downturns. It's also important to have a long-term investment strategy in place and to avoid making impulsive decisions based on short-term market fluctuations. Changes in your investment goals. If your investment goals have changed, you may consider selling your stocks to reallocate your portfolio. Changes in investment goals are another reason why investors might consider selling stocks. As an investor's goals, risk tolerance, or financial situation change, their investment strategy may need to be adjusted to align with those changes. It's also important to consider any tax implications of selling stocks. Depending on the investor's tax situation, selling stocks could result in capital gains taxes, which could eat into their returns. Investors should consult with a tax professional to understand the tax implications of selling their stocks before making any decisions. Individual stock performance. If a particular stock is underperforming or is no longer meeting your investment objectives, you may consider selling it. When considering selling a stock due to underperformance, it's important to assess the reasons for the poor performance. Is it a result of broader market conditions, or is it specific to the company's performance or industry? Investors should also consider whether the company's long-term prospects have changed and whether it still fits into their overall investment strategy. It's also important to consider any tax implications of selling stocks. Depending on the investor's tax situation, selling stocks could result in capital gains taxes, which could eat into their returns. Investors should consult with a tax professional to understand the tax implications of selling their stocks before making any decisions. Ultimately, the decision to sell stocks should be based on your individual circumstances and investment goals. It's important to consult with a financial advisor or conduct thorough research before making any investment decision. To learn more about life, business, and technology, subscribe to this channel. See you on our next video.